Hello everyone. So today one of you guys asked me about my thoughts on Baba stock as tomorrow it will be the earnings. So today I will share mainly three thoughts about the stock, mainly on the qualitative side rather than the quantitative side. So I look at some analyst target price. It's pretty around $300. And for example, Morningstar analysts, their fair value of the stock is 296, and as currently the stock is around 264. So some investors may think it's a good time to invest. So for me, currently I don't hold any Baba stocks, and I didn't buy the dip last time when the stock dropped 20% in last November. There's three mainly reasons. The first one is that the Baba stock drop is because the Ant Financial IPO has failed due to the regulations, and Alibaba has owned 33% of Ant Financials. The fail of IPO has affected Alibaba's overall valuation. So Ant Financial mainly have three types of business: online lending, money management, and also the payment business. Its major revenue source is actually from online lending, and it accounts for 40% of the total revenue of Ant Financials. And for this land business, it has cooperated with the banks in China, and Ant Financial only provide a very small amount of the lending, while the bank provide most. After they got the revenue, Ant Financial will receive around 30 to 35%. And after this regulation change, there's one of regulation that those lenders need to provide at least 30% of the assets. So that means Ant Financial needs to provide more assets in the lending process. So that will lower their ROE. If they want to go public again, they need to change their business model. And if they change that, their ROE would be decreased a lot from the current 30%. And the second reason that I'm not long on Baba stock for the long term is because of antitrust law. So in Chinese market, there's a lot of competitors in e-commerce space like Pinduoduo and JD.com. Previously, Alibaba can become sort of a monopoly in the e-commerce space because it's forced the merchant to pick one from the two platforms. Because of that, a lot of merchants, especially the merchants of clothing, they have to pick Alibaba over JD.com. So that's why JD is more focused on the electronics products for a lot of years, just because its competitor at Alibaba uses term to prevent those merchants to cooperate with other e-commerce platform. So after this antitrust law, I think it would be benefit more for JD.com as well as Pinduoduo, because after that, Alibaba's platform, including Taobao and Tmall website, they are not the only channel for a lot of merchants. So that would lead to decrease of Alibaba's e-commerce segments. And we know that e-commerce is the cash cow in Alibaba company. Although they have some other big projects like Ali Cloud and other media segments, but the e-commerce segments provide most of the revenue, and that support a lot of other projects that hasn't made a lot of money yet. So after that, Alibaba's cash cow will be affected. So that would also have a impact for other projects in terms of capital. The third reason is because Alibaba has a lot of enemies in the Chinese market other than its direct competitor JD and Pinduoduo. Also some tech giants like Tencent and ByteDance. For example, on Tencent's biggest social platform, which has more than 1 billion users, it doesn't allow any links from Alibaba's platform in order to prevent people just click on link and go to their platform directly. Some other competitors like Meituan has also criticized Alibaba in public about their business model. So I feel like they have a lot of rivalries. They will definitely not collab with a company, although Baba already have one of the biggest e-commerce platform, but in terms of traffic, it's not comparable with its competitor like Tencent. those competitors don't want to cooperate with the companies. So I feel like that would be also an obstacle for further growth. So that's the 3 reasons why I don't buy Alibaba. Hope you guys find it helpful or interesting, and I will see you in my next one. Bye!